Bring him in. It's our next guest analyst. He's batting cleanup on the day today, on our first day. Mr. Oliver Slope, Blue Line Futures. I've got 120 seconds for you, sir. Have at it.
Good deal. Yeah, well, Happy New Year, everyone, and happy early birthday to you and the show, Scott. I can't believe it's been 3 years. It seems like you were just down here in Chicago the other day.
Yeah.
The grain market's a little bit of a choppy trade and a little bit of a mixed bag. The wheat market underperforming for the second consecutive day. You know, what we're looking at is a corn and soybean market potentially with a little bit more upside, and I think soybeans maybe a little bit more favorable in our opinion, and you and I talked about it on Monday with regards to a contrarian view in that market, that there's just a lot of bearishness that's been floating around for the past several months, and it's really just been the same story on repeat, where I think everyone is overwhelmingly bearish, and you could get a surprise to the upside. Now, again, that's a contrarian viewpoint. I understand those are fundamental headwinds, but when everyone's on the same side of the boat, I generally like to look to the other direction and ask a few more questions about what's the market potentially missing here and where are the risks. And in my point of view, those risks are to the upside. If weather it starts to turn in South America, potentially trade negotiations end up better than previously thought. Those could propel prices to the upside. 1020 to 1022 in that soybean contract, that's going to be the big line in the sand. Those were the highs from November. If we get out above there, we could see a nice move towards 1050, 1055. Corn market, 459 to 460. That was a big inflection point earlier in 2024, support and the low end of the range from February and the eventual breakdown point in June. So we're just stalling out there. I think if you're a producer, this is an opportunity to play defense on corn.
Yeah, I mean, are you rewarding any of these rallies, or are you kind of hanging back?
I think soybeans, we're hoping we can get a little bit more upward momentum. Corn, again, I think you got to play defense here if you're a producer, especially if just a few months ago you were saying, man, if I could get the market back north of 450, I would have made some more sales. Well, here's your opportunity.
All right, great stuff. Stay right there, though. We're going to come back to you. We're going to go away, ping him back in. Mr. Oliver Slope, Blue Line Futures. He's in Chicago. Thanks for sticking around, Oliver. Anything jump out at you there?
Well, the bull run continues in cattle. We've seen some volatility in some of the outside markets, and the cattle market has been just kind of shrugging that off, which I think underpins the strength that's in that market. We've got some concerns over cold weather in the forecast that I think is also helping offer some support. With that said, I think we're at some pretty lofty levels where you're going to want to try to protect price if you've got protection needs to meet. We have gotten some rumors in Texas this morning, 195 cash. That would be pretty darn firm. I think that's probably where we'll end up trading to round out the week. But again, when you get funds almost record net long live cattle and feeder cattle, I think it's an opportune time to look at some downside protection.
Yeah, I mean, you agree with me about, I guess there's a lot of, the correlation between stocks and some of these cattle, these cattle futures prices makes a lot of folks get nervous because they're nervous about equity markets, right? I mean, this thing's been, well, we're up 23% in the S&P for the year last year, 28, 29 in the NASDAQ. If we see that peel off pretty aggressively, that's going to get some cattle people nervous.
Yeah, absolutely. And I think a lot of that just revolves around consumer demand and overall market sentiment from consumers. And if you start to see the outside markets falter a little bit, they may look to peel back on some purchases and look for cheaper protein alternatives. And that would probably be pork in this case. And we talked about the lean hog market for the last several months being record net long. We've seen what happens there when funds exit. And I wouldn't be surprised to see the same thing eventually play out in cattle. It's just a matter of when that time is.
Yeah, it's funny. It seems like the consumer is acting just like our lawmakers, right? They just keep spending, the doom loop spending, like they don't care. Honey Badger doesn't care. We're still spending.
That's a great analogy.
I appreciate you coming on. Oliver Slope, Blue Line Futures in Chicago. Oliver, thank you very much for all of your content last year. Have a happy new year, and bring it back here.